Stocks trade ranged as global uncertainties linger. Power, industrials and metals gain, while IT and realty stocks trade soft. Adani Cements has reached an arrangement with truckers in Himachal Pradesh to trim freight costs by 10 to 12%. The move paves the way for units of Ambuja Cements and ACC in the state to resume operations. The government has directed power units importing coal to operate at full capacity in the peak summer months to avoid power shortages. The diktat suggests compensation for higher costs, buoys talks of Gencos. And hopes of China announcing a stimulus package in March lift steel prices to a 7-month high. Stocks of Indian steelmakers gain on cue. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra Parekh. Those are the top headlines that we have for you at lunch hour. There's lots for us to talk about. The market, by the way, we were holding with around a 50-60 point gain. We're now absolutely at the flat line, just around 5 points in the red for the Nifty. We've actually just right now breached below the 20 DMA as well, which was, quite a crucial support level. So we have broken below those levels, but, holding with cuts of around 6-7 points. So no big cut coming through, but we've come significantly off the day's high. The Nifty Bank has also given up a large chunk of the gains that we saw in the morning. So that is down around 70 points right now. Some of the larger losers from the banks are from the large cap names, so the likes of SBI, Axis, you have IndusInd, which are all pretty much at the low point of the day. In fact, a lot of the smaller banks as well, whether you look at a Bank of Baroda, Bank of India, something like a Canara Bank, these are also seeing their losses just intensify. So Bank of India now down almost 6%. So there's definitely weakness in that spot. Real estate is the other pain point for the market today. Just a few of the names up on your screen, losses between 3 to 4%, but pretty much that entire space is losing. The Adani group of stocks, barring Adani Power, all of them in the red and locked in lower circuit once more. Adani Green, Transmission, Total. So keep that space on your radar. What's doing well is power. We will talk more about this, but there's been a new directive from the Power Ministry. So you have the likes of NTPC, Tata Power, Adani Power. All of these doing quite well. IEX is up 5%. So do keep that on your radar. And in this weak market, some of the new age companies are also holding up quite well. So whether it's a Zomato, you have a Fino Payments Bank, these ones doing relatively better. So that's what's really going on with the market. We'll talk more about this. But first up, let me talk you through the top story of the day, which is clearly the power space. Like I told you, the stocks are all buzzing in trade after the government's directive has said that, imported coal-based power plants need to operate at full capacity during the summer months. My colleague Abhimanyu Sharma is here to take us through the details of that order. Abhimanyu?
Well, on a request by various states, the union government, the Power Ministry has invoked Section 11 of the Electricity Act. Now, that is an emergency provision which has been invoked. It was invoked last year too, and that essentially mandates that all imported coal-based plants, power plants, will have to function at full capacity. And this order particularly covers 15 imported coal-based power plants. The variable cost in this case is to be fixed by the government, as the government order clearly mentions that various power purchase agreements do not factor in the high cost of imported coal. Hence, in order to ensure that the business worthiness of the imported coal-based power plants continues to remain, a committee which has been set up by the union government, comprising of representatives from the Power Ministry, the CERC, and various other government institutions, will fix the variable cost on a regular basis. The order which has been passed by the government will be applicable from the 16th of March to the 15th of June, and it's likely, like the previous year, that it is going to be extended if at all the peak power demand continues to remain. Now, the power demand is going to peak, as far as the forecast is concerned. The peak demand forecast for April is 229 gigawatts, of which 193 gigawatts will be required from thermal power stations to meet the demand. And the government, earlier, the CERC had approved new market segment for expensive power on exchanges. So clearly, the government has clearly laid out a roadmap to ensure that the imported coal-based power plants are able to function at their full capacity, as well as give power without taking much losses. It remains to be seen what further action will be initiated from the government side and what more recommendations will be given by states to avert a situation like the previous year, when there was a shortage being claimed by states in April at the peak of power demand, whereas the union government had maintained that the states had not offtaken ample coal despite being provided the ample supply.
All right, Abhimanyu, thanks a lot for that. So this move definitely comes as a big positive to the power players. The stocks are all excited in trade. But sticking with this, Vivek is here to tell us what brokerages are making of this move as well. Vivek?
Well, that's right. An important development coming in as far as the entire power space is concerned. And Citi has actually written on the electric utility space. What is it that they're saying? They're saying that this move will actually benefit all of the companies that are using imported coal-based plants. And in fact, they're saying that currently what's happening is they're unable to do a full cost pass-through of the expenses that they're incurring. And that is why, currently they're all operating at very low capacities. In fact, what they're saying is that Tata Power's UMPP Mundra plant will benefit the most. In fact, it will benefit for the period under which, the Section 11 continues to remain in force. Some other analysts also say that, this particular move is more positive as far as coal-fired power plants are concerned. In fact, historically what's happened is in the first quarter of FY23, the PLF trends as far as NTPC, which was at 70%, actually improved to a little over 80% during the period Section 11 was in force last year around. Merchant power merchant power rates are also likely to improve, and this is again seen as positive as far as the entire power space, including the power exchange IEX is concerned.
All right, Vivek, thanks a lot for putting all of that into perspective for us and taking us through the kind of positive that this could be for the power companies. But with that, let's move on and talk about a stock which is not doing so well today. That's Minda Corp. It's under pressure, almost 4% lower. This after the company in their conference call last evening reiterated what it had really told the exchange earlier as well, that its buying of the 15.7% stake in rival auto parts maker Precall was purely a financial investment and nothing more. So let's listen in to some of those comments.
Minda Corporation has purchased 15.7% equity in Precall for a cumulative amount of 400 crores through on-market transactions on 17 February 2023. The shares of Precall are purchased solely for the investment of the surplus funds available with the company. Minda Corporation investment in Precall is through market purchases constituting a minority stake, and this investment does not grant any special rights. Minda Corporation is and will be generating enough free cash flow from operations to fund our routine capex and organic growth. The company has well-positioned balance sheet. We have, after this investment, we'll have a debt to equity at about 0.3, and the debt to EBITDA will be around 1:1. The long-term debt as of today is about 150 crores. Short-term is to the tune of about 350.
All right, that is the management of Minda Corp in their conference call last evening. But another stock which is under pressure today and has been for a better part of this trading session is Uflex. This after sources are telling us that the IT department is conducting search operations at its Noida office. Timsy is here with some more details. Timsy, what are you picking up from your sources and what is the IT department really alleging right now?
Well, as we speak, the search operations are underway at Uflex facility here in Noida. And IT department alleges that their internal investigation has indicated that Uflex has been concealing income by issuing bogus invoices, bogus bills. And that is what they are there at their Noida office to search for. Remember, this is a search operation and as we speak, it is still underway. What kind of evidences they get is something that we'll have to wait and watch till the search ends. And not to forget, very clearly, there are clear evidences. That is why they went ahead with a search and not with a survey, because they feel that they have the entire trail. They just want a formal communication, a formal evidence from Uflex facility. Let's see what they are able to find out at the end of the search. Back to you.
All right, Timsy, thanks a lot for bringing us that. So it's Uflex under pressure, 2.5% lower as we speak. We do have to get into a short break now, but on the other side, sources are telling us that the NSE is holding talks with market participants on extending market hours for the derivatives segment. We'll get you more on that when we come back. Hey guys, welcome back. You're still tuned into Business Lunch here on CNBC-TV18. Some information that we're picking up. Sources are telling us that the NSE is holding talks with market participants on extending market hours for derivatives. So Prashant is joining us to tell us more about this. Prashant, this is really not the first time we've heard about this, but looks like there's some fresh buzz.
No, absolutely. The proposal or the discussion, the debate has been around for a decade at least. But this has got fresh impetus now because we understand from sources that exchanges spearheaded and led by the National Stock Exchange is indeed speaking with market participants, brokers, small and large, to debate and discuss and get feedback about the subject, which is extending trading hours from 9:15 to 3:30 currently and beyond. Well, the discussions focus to begin with on extending the timing for equity derivative contracts, nifty futures and the like. But of course, that is to begin with. There is no deadline or timeline by which a decision has to be arrived at. I mean, so it's a bit open-ended in that particular sense. While this is, feedback has been sought and this is at a preliminary stage, there is no to-do or a deadline to actually do this one way or the other. I mean, if they decide to do this or not. There is widespread acknowledgement, and as I said, I spoke with a lot of participants, stakeholders in the markets. There's widespread acknowledgement that any decision basically will require things like settlement, technology, and many other issues to be resolved and settled before one can actually proceed. Exchanges are of the view that any changes will be implemented in a gradual way. The implementation of the T+1 is something that was pointed out too, which happened in a gradual way, not like everything happening in one single day. They're also of the view that one of the big reasons, and this is again something we've heard in the past as well, that a lot of the volumes are getting shifted to offshore markets, like for example the SGX Nifty. This perhaps brings back volumes from there back here home. And also, the other argument being given is that this will allow and this will align markets here along with global trading and global markets. So investors and traders here will be able to react faster with global developments. And of course, I mean, it's an interconnected world in that sense. Where does the regulator stand in all of this? The SEBI in 2018 had actually put out enabling framework for timing extension. So that approval in that sense is already there with exchanges. And that basically enables exchanges to have within themselves the power to extend trade timing in F&O segment till 11:55 p.m. and in the cash segment till 5 p.m. So the SEBI go ahead in 2018 enables exchanges to actually do this. Now, will this happen, not happen? It's something which we will continue to track closely. But at this stage, the discussions are on and at a very preliminary stage, a fair bit of back and forth, and of course, all kinds of views which would naturally be around a subject like this, which affects pretty much everyone in the market ecosystem. Back to you.
All right, Prashant, thanks a lot for bringing us all of the details there. Something else that we are tracking that we want to bring you up to speed with is the G20 meeting, which, all eyes are really on, and debt vulnerabilities, controlling inflation, financial stability, strengthening multilateral development banks, and regulating cryptocurrencies will all be on the agenda when the G20 finance ministers meet in Bengaluru this week. But one issue that is really likely to dominate the agenda is the suffering and disruption caused by the Ukraine-Russia war. What could be the possible outcomes of this G20 meeting? Parikshit is here with this exclusive.
Yes, CNBC-TV18 has exclusively reviewed the G20 finance ministers' outcome document, and the G20 declaration is likely to strongly condemn the war in Ukraine. The joint statement is likely to highlight the immense human suffering and elevated financial risks caused by the war. The ministers will strongly state that the threat or use of nuclear weapons is inadmissible. Sources say G20 ministers will emphasize that dialogue is vital and today's era is not one of war. But it's possible that Russia may not be mentioned in the statement at all, as the G20 works with consensus, and reference to Russia in the context of the war may not be acceptable to Russia and China. One of the big economic priorities that G20 finance ministers will highlight is the need to press for urgency in addressing debt vulnerabilities, as the global slowdown, inflation and tightening financial conditions may worsen the debt situation in emerging markets and developing economies. The ministers' declaration may emphasize on the need for coordination by official and private creditors to relieve debt distress. The meeting to call for swift resolution of debt issues in Zambia, Ethiopia and Sri Lanka as well. The finance ministers to call for agility and flexibility in policy response, use of macro-prudential policies to safeguard against downside risks,
The ministerial statement that will be issued after the meeting on the 25th of February is likely to focus on temporary and targeted fiscal support to vulnerable groups while maintaining medium-term fiscal sustainability. The statement will also say that central banks shall remain strongly committed to price stability and will also focus in great detail on the need to strengthen multilateral development banks to deal with transboundary challenges and catalyzing private investments as well.
All right, Pariksha, thanks a lot for bringing us all of the details. That is going to be important to watch. By the way, for the markets, we're back in the green right now. We have come around 30 points off the low, so 17,853 is where we're at right now. We did break below that 20 DMA, but we have recovered since. The mid-cap index also completely in line, just around 20 points in the green right now. And the banks, like I was pointing out, continue to be under pressure as well. So around 27 points lower is what we have on the Nifty Bank, dragged lower by a lot of the larger names. And the Nifty PSU Bank Index is actually the biggest sectoral loser as well. We'll talk more about the markets, but we have to get into a short break now. On the other side, 2 fresh earthquakes have hit the border region of Turkey and Syria on Monday. We'll bring you all of the details on the other side. Hey guys, welcome back. You're still tuned into Business Lunch, and it's time to bring you some global updates. 2 fresh earthquakes have struck the border region of Turkey and Syria on Monday, 2 weeks after the devastating February 6 earthquakes, which killed over 47,000 people and damaged thousands of homes. Earthquakes of magnitude 6.4 and 5.8 were centered near the southern Turkish province of Hatay and also felt in Syria, Egypt, as well as Lebanon. The Turkish Interior Minister said that 8 people were killed and 294 injured after yesterday's earthquake. The quakes were also felt in 10 other Turkish provinces, which were significantly impacted by the earlier 2 major earthquakes that we saw as well. All right, so that is an important update we had to bring you on Turkey. We will keep tracking this and bringing you more on it through the day. But some more from the global front. U.S. President Joe Biden promised more arms for Ukraine as he spent over 5 hours in what was an unscheduled stop in Kyiv just days before the war-torn Ukrainian capital marks a whole year of the Russian invasion. U.S. President Biden was escorted by his Ukrainian counterpart Zelensky on a walkabout around central Kyiv, even as air sirens could be heard throughout. Speaking alongside Zelensky, Biden said that the brutal and unjust war was far from over, but added that Putin's war of conquest is failing. Biden also announced fresh military aid of $500 million for Ukraine, saying that it would equip the military with more high-mobility artillery rocket systems. So that is all important to track from a geopolitical perspective as well. Some more from the Ukraine crisis. Russian President Vladimir Putin will be delivering the State of the Nation address to the Russian Federal Assembly today. So this will be Putin's first State of the Nation address in 2 years. And remember, of course, it is crucial in the backdrop of Russia's invasion of Ukraine. The spokesperson for the Kremlin said, and I quote, "At such a crucial and very complicated juncture in our development, our lives, everyone is waiting for a message in the hopes of hearing an assessment of what is happening, an assessment of the special military operation." Remember, this address is scheduled at 2:30 p.m. India time. So, we will watch for this and everything that comes out, and we'll bring you the highlights as and when we do get them. So that's everything that we're tracking from the global front. But if you are a sports fan and if you are a Novak Djokovic fan, there's yet another landmark for the tennis player. The world's top-ranked men's tennis player has equaled Steffi Graf's all-time record for most weeks spent at the top of the ATP rankings. Djokovic returned to the #1 spot for the 7th time after winning the Australian Open in January and has been at the #1 spot for 377 weeks throughout his career. And another week at the top would see the Serbian set the record for most weeks spent at the top of the ATP rankings. So that is some good news coming in for tennis fans as well as Novak Djokovic fans. But on that positive note, we're going to wind down on this edition of Business Lunch with the news that the markets are absolutely flat right now. We've come off the lows, but it's just around 5 points in the green right now. The Nifty Bank still 45 points lower. Thanks a lot for tuning in. Midcap Radar will take all of this action forward.